Hello viewers, today we are going to proceed with our series of management decision and control. And last time, or the last video we uploaded was all about the ethical behaviors or the ethical requirements of a management accountant. And we had looked at the codes of conduct, or what the management accountant is expected to behave when executing their duties and responsibilities. We looked at all of them, but we mainly said these codes of conduct, they are almost the same to all the professions. And we talked about integrity, confidentiality, objectivity, and we also looked at the professional due care and competency. And finally, we looked at the independence as our 5 codes of conduct that are supposed to be seen for every profession whenever they are executing their duties. But what we are going to look at today is how are we going to be resolving the ethical conflicts. These ethical conflicts, they come as a result of not following the ethical codes of conduct, or when someone doesn't have integrity, when there is no professional due care and competence, when there is no confidentiality, when there is no independency, and even objectivity, when someone is maybe biased. So those are the ethical conflicts that may happen in an organization. Meaning these ethical conflicts, they are violating the ethical code of conduct. So the reason as to why we are going to look at the resolutions of the ethical conflicts is that we want to see if that happens and we see maybe the management accountant is not able to execute his duties as he or she is supposed to do because of maybe lack of independence, confidentiality is not there, we have to look at what can we do in order to resolve some of the ethical conflicts. These some of ethical conflicts, they may be in terms of, they may be maybe someone is trying to compromise your integrity. It may be just an act, but here what we are actually looking at is how we can solve the conflicts that may happen in an organization. For example, you may look at maybe someone wants to compromise your integrity, someone wants maybe to compromise your independence, and other ethical codes of conduct as we have seen them. If at all you have not understood them, make sure you go to our previous videos and follow through so that you can be able to know what are some of the ethical codes of conduct of a management accountant or of any professional person or professional skill in execution of their duties. So we want to see how we can deal with some of these conflicts that may come up, because as a management accountant, you will not tolerate these ethical codes of conduct. So if someone is bringing situations that are going to compromise maybe your independence, maybe your integrity, those are the things we look at and we say, if that happens, then what are you going to be doing, or how are you going to handle some of the issues? Because what we are not saying that whatever we discuss here must be applied at the same time, but you can look at what is appropriate depending on the situation you are facing. If at all maybe it is integrity, someone is compromising it, or it is your independence and someone is compromising it, you look at some of the things we are going to look at here and see what can be the best option to sort your issue. Possibly we have 4 main ways of how certain ethical conflicts are supposed to be resolved or are supposed to be handled. There are mainly 4. And these 4, we are going to discuss each of them, and we see what are the things that may happen, or what are the things that are supposed to be done in each of those stages. It's like a stage. It is a stage depending on the ethical conflict you are experiencing at the moment. Because one of the things you have to understand that some of these ethical conflicts, some of them, they can be very dangerous to the person, that to the extent that someone can say, if at all you are not going to do this and you are saying I'm compromising your integrity, then me, I'm going to do the other opposite way. So some matters that happen, especially matters concerning finance, they are some of them, they are just do or don't. Because if you do, then it means you are compromising you are compromising some of the ethical codes or how you should be doing things. And we are going to see some of these examples as we try to discuss the ways how we can resolve some of them. And probably we shall look at some cases and we see how we can sort some of them within here. So without wasting more time, let's dive in and see what we have as far as the resolutions of the ethical conflicts are concerned. One is to discuss the conflicts. We say the conflicts may be just problems or situations that are going to compromise your codes of conduct. We are saying, 1, we discuss the conflicts or the problems with the immediate supervisor, except when it appears that the superiors or your supervisors are the ones involved within the case or the problem. So in this case, we should possibly try to present this to the next managerial higher level, or the next person in the line of your supervision. This is what many of us are doing. It's one of the starting point that everyone has within an organization to settle any conflict that they may be having, maybe with their colleagues or with any other person. The first thing is to discuss with your immediate superior or your immediate supervisor. So we may try to look at an example. If, let's say, you are an accountant, of the organization, and you are seeing maybe the accounts assistant or the person that is below you within the organization chart is, because first of all we have an accountant, then below you'll have these accounts assistants. So if, let's say, You are the accountant of the organization, and maybe your accounts assistant is bringing a deal. You know, some of these financial issues, we are going to talk about them in terms of the deals, because where there is finance, we expect someone to be earning and the other person to be losing. So just like the way we do debiting and crediting, or the way we subtract this and we add the other side, it's what we are mainly going to be looking at here. If maybe you are the accountant and the accounts assistant is bringing a deal, maybe they may say that we are maybe you try to discuss maybe to changing some of the invoices, because changing the invoices, it means you are going either to report the amount that is below what you have actually recorded, or reporting figures that are going to be high. Because when you report a higher figure, it means the difference between the figure you have reported and the actual figure that you would have recorded, that difference will be the one that will be that amount that you two are going to be sharing. But it may happen that for you, as the accountant, you may not agree with what the accounts assistant is giving you. You may say, we try to change the figures of the invoices to a given amount, and you report a given amount so that you can see a difference, and that difference, it will be the one that you are going to be sharing. So if you feel that you are not happy with that, then you may discuss that with your superior. Remember, with the accountant, meaning your line of supervision or the next person, depending on the organization, it may be the finance manager. It may be the finance manager or the head of the department. But what will happen if at all you report your accounts assistant that maybe so and so is trying to do some of the things that are going to compromise my integrity or my professional duty and competence, then you can try to discuss that with your finance manager, not in a way that is reporting that person, but it will be in a way, because you are not supposed to create a situation that will cause misunderstanding between the other accounts assistant. Because what will happen if you report your accounts assistant to your superior, it means this person, they may terminate or they may fire the person. But you do it such that if in an organization we have very many accounts assistants, they don't actually find it hard for them to deal with you. So you do it, you tell the finance manager to handle things in a way, because I know the finance manager may find other options of how to deal with the accounts, with that very accounts assistant, without firing that person. But the finance manager may decide maybe to put the accounts assistant, that same accounts assistant, in another department. If, let's say, that person has been maybe in receivables, the person may be transferred maybe to payables, or the person may be transferred maybe to do the payroll. And you'll be seeing that the person, the finance manager, has not acted in a way that is going to that is going to make the finance the accounts assistant lose the job, but he or she has provided a solution to the problem. So that's how we always encourage that some of the things, you may find that there are always solutions to some of the things. If maybe the person is not going to transfer the accounts assistant from a given ledger to another ledger, they may find that they are going to put, maybe the finance manager can implement a very critical or a strong internal control system that is going to detect if at all the deal that the accounts assistant was suggesting goes through. Because by putting the strong internal control system, it means that those loopholes are going to be retrieved. And so it will make the accounts assistant not to do that again. So it's something that can be used to avoid conflict of interest or the ethical conflicts. But sometimes you find that this alternative may not work. It doesn't work. For example, if let's say it was your superior, now if you are the accountant and it's now the finance manager that is bringing the deal and is bringing maybe bringing the deal maybe to the accounts assistant, and they want maybe for them to benefit, then in that case we may find that you may find it very hard to report, because reporting to your superior, yet it is your superior who is actually involved. That's why here we are saying that you discuss the conflict with your immediate supervisor, except, meaning there is an exemption. If at all it appears that it's your superiors that are going to be involved in these deals, then you may find that this solution may not actually work out, because it will be your superiors that are going to be dealing in ways that are going to conflict or to reduce your ethical behaviors. Because at one point we may say that maybe you can report your superior to the next managerial line, because when you leave the finance manager or the CFO, you may find that the next person is going to be the MD or the CEO. But in an organizations, the organizational charts or the line of supervision, we always have that line of supervision. That if, let's say, you are the accountant, there is no way you are going to communicate to the CEO without the authorization from the CFO or the finance manager. So this at some point doesn't work if at all it is the superiors that are bringing deals to these lower people. Because we said sometimes it is the structure of communication within the organization. There is that line of supervision that if it is the accounts assistant is supposed to report to the accountant, and the accountant is supposed to report to the finance manager or the CFO, and it will be the CFO to report to the MD. So because of that line of communication, we find that it will be hard for you, the accountant, to report direct to the CEO if at all it is the deal is between the finance manager and the accounts assistant. So this kind of engagement mainly happens in this government or political situation. It's mainly in political aspects and this kind of government operations, because you may find that maybe if, let's say, we use an example, it is the minister that has been appointed by the president, and you find that the minister is maybe bringing a deal to the accountant of that ministry. It will be hard for the accountant to go and report the minister to the president, because the line of communication will not be actually there. So what will happen is that you find that the accountant ends up doing what the minister is saying, because at the end of the day, there is no way you are going, as you, the accountant of the ministry, you are going to report to the president. So it is always there that the superiors are going to be the ones that are going to be initiating some of these deals. And when that happens, you find yourself compromising your ethical codes of conducts. So if that happens, then we are saying, what can you do as the accountant? If let's say it is the minister that is bringing a deal to the accountant of the ministry, but the accountant cannot report to the president because it is the president who appointed the minister. So the line of supervision would be, it will be the accountant to report maybe to the PS or the permanent secretary, then it will be permanent secretary to account to the minister, and they see what they can actually do, because the minister will be reporting to the president. So if that happens, then what we do, we look for another stage, or we go to another stage where you can actually get information on how you can handle some of the issues. Because I told you some of these issues, they are very delicate to the extent that someone may end up losing life. Because just imagine if I told it was the minister starting the deal to maybe to the accountant, and the accountant has no other alternative but to do what actually the minister is saying. So what we do, there is a next stage, and that brings us to our part number 2 of the resolutions that are supposed to be taken in order to fight the ethical conflicts. And our part 2 says, clarify relevant ethical issues by confidential discussion with an objective advisor to obtain better understanding of the possible course of action. In other words, here we are going to be looking at getting someone, an advisor, possibly is going to be an external person. That external person is the one that you are going to maybe to ask for how certain, because we assume that by the time you pick the external advisor, that person should have been maybe experienced in that same, or should have been having some experience in that same role as you are doing. In other words, you are looking for someone who can actually give you help in order to find a possible way of doing with such scenarios that may happen. So we said you can also look for, it's supposed to be an independent person. Probably that someone may not be part of the entity, but that person is experienced in that field. If at all we've given an example, it's a ministry, and you are the accountant who is facing some of the unethical codes of conduct, you may say that maybe I'm going to look for an independent advisor, but that person should have experience in that same field you are in. However, normally the institute or the Institute of Certified Public Accountant is the one responsible for all the accountants in the country. So the institute normally gives, or they can allocate for you someone that you can talk to and be able to get advice. And the institute does that. It is a service the institute does, and it is always at a free cost. Because what the reason as why it is there, it is to guide. And that's why they can be able to get for you someone who can be able to help you depending on the situation you are facing, and that service is normally free. So, but this also, at some point, it doesn't work out. The reason as why it doesn't work out, it is mainly, let's assume maybe it is now the finance manager who is bringing the deal to let's say the accounts assistant, and you are the accountant. What this happens, it means that this independent advisor you are going to get from, let's say, the institute, that person is not going to be knowing the things that are happening within the organization. And secondly, as an accountant, we expect you not to disclose all the information to that independent accountant, because if you do so, you are compromising the confidentiality code of conduct. So you will be seeking advice, but you are not supposed to explain how things are or how things are going within the organization. So because the independent advisor may not know what is taking place, then because at the end of the day, that independent organizer is not part of the organization, is an external person, doesn't know what is happening within the organization. So, and you, the accountant, also are not even allowed to disclose all the information to that very person. So it becomes hard for you to find a solution, because the person you are, even though the person is experienced in that field, but you are not supposed to disclose all the information that is relating to the organization so that you can get the assistance. What we do, we look for an extra, or we go to the next stage, and that brings us to the part 3, or the stage 3 of how we resolve the ethical conflicts. And the part 3, or the stage 3, says we consult our own lawyer or attorney as the logical implication and rights concerning the ethical conflicts. What this means is that we always go to our independent lawyers. These lawyers, their role is not to give you advice on how you should make the decision about the matter that is going on, but they are supposed to guide you on the implication of what will happen if at all you choose to do A or you choose to do B. If at all you accept, what will be the implication? Will it drag you to jail, or will it cost you some money? Because you know, when you compromise the ethical codes of conduct, at some point it is these third parties that are going to be involved, they can decide to sue you and you end up in jail. So what will happen is you consult your lawyer regarding on the result that you are going to be. If at all you take A, or you decide to go with A, and when you decide to go with B, what will be the legal implications that are going to come out if at all you have compromised? Because at the end of the day, you know, if what the person is telling me to do, it's actually compromising my ethical codes of conduct. So you are trying to consult. If that happens, then is it in your favor in terms of the law, or it is not in your favor? So the consultation will be intended to find out what happens in case the deal backfires. Because you may have options, but you may have these options, maybe to say yes or to say no to a given situation. But to take up the deal, and sometimes it is, as we said, sometimes some of these deals, they are just a do all done deal. You find that if you don't actually do what they are saying, you'll end up dismissed from the job. And if at all you do what they are telling you to do, you may find that you are going to be losing your confidentiality. So if you are losing your confidentiality, or you are losing some of the codes of conduct, it's also a challenge in a sense that at some point it may also bring troubles. So what we do, we always consult the lawyer about the possible circumstances. Because you try to look at, if at all I don't do what they are telling me, and they fire you, because at the end of the day, if it is a do or done deal, and you don't do what they are telling you, they may terminate your contracts. So what will happen? You will consult the lawyer. If at all that happens, and if you don't do what they are telling you to do, and they terminate your contract, if you happen to sue the company, will the court decide in your favor, or it will be you to lose? So those are the things that we are going to be looking at when we are consulting our lawyers, so that we can see the point at which we stand, whether to do what they are telling us or not to do it. Because if you see that they are compromising your codes of conduct, but you can escape that and they terminate your contract, at the end of the day, you sue them and you win the case, you have won, because that will be an idea. But you don't just decide that let me do this, but you first consult the lawyer and you see the possible outcomes, if at all you take any of the options. So that's the third step. But however, in real life situations, it's always hard to adhere to all the ethical codes of conduct. It's always hard because the working environment we are employed in as the accountants, it's sometimes it is hard for you to adhere to all the ethical codes of conduct. But what we are saying is that you have to actually do what is right. Most of the times we advise that you always do what is right. So let's finalize, and we look at the fourth stage, and it is this last stage. If at all you have gone through all these three and still the ethical conflict is still existing, if the ethical conflict is still exists after exhausting all the levels of internal review, and you have also chosen these other options, the external one, and you still see that the knowledge you have got or the advice you have got is not helping you, the last option is to actually resign. Resigning is the last option. But as a matter of fact, it's not that whatever the conflict of interest or the ethical conflicts happen in an organization, you keep resigning, because At the end of the day, the working environment is always complicated to the extent that some of the ethical conflicts are going to be happening most of the times or in the real life situations. But it doesn't mean that whenever that happens, you start quitting and you start looking for other jobs, because we can't just be cowards. Sometimes we have to make decisions, and we first look at all the possible ways that we can actually resolve some of the issues that may happen. Then at the end of the day, we decide maybe to resign, but that should be the last option when you have actually tried everything, but things are not working out. Because sometimes, as we said, sometimes if you do what they are telling you, you may find that your certificate, the institute may say that what you did wasn't right, and they may remove you, they may remove the membership from you. So you end up losing your certificate because of the things or your actions that you have done, which are against what the professional body is supposed or is expecting you to do. So that's all that we need to do if at all we are experiencing the ethical conflicts within an organization. But as I said, we are supposed to make decisions within the organization. We may try maybe to look at the decision-making process as a brief, because some of these steps, they are easy to understand, they are self-explanatory, they don't need someone to break them down. One, we start by identifying the overall objectives, the vision or the mission, and the goals of the organization. We look at what the organization is trying to achieve. In other words, every organization that sets up, they have an overall vision or mission or the goals as to why the company is starting up. So whatever we do within an organization, we structure everything towards achieving the overall objective of the firm. Second is search for alternative course of action. We look at the different possible ways of how certain things can be done. If at all we are looking at maybe having sales volume, maybe to a tune of maybe 1 billion within 1 year, we look at the alternative course of action. Maybe we look at maybe the level of advertising we need to do, the salespeople that we need to recruit, so that we can be able to achieve the overall objective of 1 billion sales volume. So after looking at getting those alternative ways that can help us to achieve the overall objective, then we try to collect data about each alternative. If it is in terms of the number of people want to recruit or the salespeople want to recruit, we look at data about them, the experience that we need, the number of people that we need, and what they are actually supposed to be delivering each of them. So even the level of advertisement, where are we going to be advertising? Is it going to be in the media, social media, or supposed to be on television, all other newspapers and all that? So if at all we have collected the data, then we select the appropriate course of action. If it is maybe the people we are supposed to recruit, they are supposed to be maybe having 5 years experience in the same field, then we may say maybe the level of the advertisement we are going to be using maybe social media. Then we select one that is going to be the best, that will help us to achieve the overall objective. Then after picking that appropriate course of action, then we have to implement the decision. Implementing the decision is to achieve the what? The 1 billion in 1 year. So we implement what we have selected, and we make sure that we achieve our objective. Then the last option is to compare if at all we have actually implemented the decision and we have seen the outcomes. What will happen is that we look at the actual outcomes, we compare with what we had planned. If at all we had planned maybe to achieve 1 billion in sales volume in 1 year, but we have achieved maybe 2 billion of sales volume in that same 1 year, then we can see that we have actually performed better than what we had actually planned, meaning we have a favorable performance. But if we see that what we had planned is actually we have not achieved what we have planned, then we can go back to review where we went wrong, and so that we can be able to improve on that and be able to achieve the sales target that we had set. So that's basically what we need to know as far as decision making is concerned. Then let's try to look at the last bit of the introductory part before we go to our second topic, because our second topic is going to be the costing system. So before we go there, let's try to look at the behavioral, organizational, and social aspect of a management account. In other words, here we are trying to look at some of the things that are going to influence the decision or the decision making. We are basically looking at the management accountant, and we want to see how is the management accountant going to be behaving within the organization, and how the organization is expecting that person to relate with the other departments within the organization. And this is basically what we are looking at. We are seeing that the behavioral aspect is one that influences the decisions of people concerned with decision making and accounting system. So we say that the management accountant helps management to perform all its functions, including planning, organizing, staffing, controlling, and everything that we do within the organization. We looked at the roles of management accountant. We saw what the management accountant does within the organization. So here we are trying to look at the way how this management accountant is going to be connecting some of those departments, the planning department, maybe the organization, because we said among the roles, the management accountant performs most of these roles. So we want to look at how the management accountant is supposed to behave by influencing decisions of management and relating well with people within the entity. But we are saying that if that person, if the management accountant is relating with other people within the organization or with other department, the relationship should be ethical, in an ethical way, as we've seen how the management accountant is supposed to behave. So that's basically what we can look at here. So our next topic is going to be the costing system. But if you haven't subscribed, make sure you subscribe, comment and also share your suggestions as how you want us to be handling some of the topics, so that we can be able to improve our understanding and also be able to improve our passing. Thank you for watching.